Hello, everybody out there, all of you everyday traders. My name is Eric Hale with Trader Oasis, and we're here to talk to you about some stuff that's going on, talk about some economics and stocks, and hopefully make you all better traders. And yeah, and I'm joined today by my friend and partner, Greg Jensen.
Hey, I had a friend give me a hat.
I like that
So
hat. If anybody really, really wants a hat, let me know. We'll see if we might be able to hook you up with one. I got a few of them here. Um, if you really want one, and you're a Trader Oasis member, we might be able to get you one. All righty. So as we're talking right now, the shareholder meeting for Tesla is going on. Elon Musk is on stage. I can see him. He is super motivated. I can see the energy. They've got almost 500,000 people watching this thing live. Big news with Tesla. It looks like they did pass the shareholder votes so that he is going to get that massive pay. Like, was it $52 billion or something?
yeah, something like that, huge amounts of money. And one of the things I think it was actually his partner that he founded PayPal with. Why do I just lose his name? Political activist
Peter
now.
Thiel.
Peter Thiel. I remember Peter Thiel getting interviewed. This was several years ago. I think it was right around the time when Elon was buying Twitter, which is now X. And I remember, he was catching a lot of heat for it. And he basically said, one of the things I've learned over the years is you never bet against Elon.
That is one of my favorite lines is never bet against Elon. We had a huge move up in Tesla today. I can share that screen there. Yeah, 2.92, a couple of really good days. I'm not sure. I think a big part of it is this shareholder thing. I'm excited because I follow the tweet conversations pretty closely, and there's a few people who actually communicate with Elon. It's pretty amazing. Got a billionaire who talks to regular people. But the whole Mars blog, which is Omar Quasi, uh, said, congratulations, and said something like, okay, now your challenge is to make Tesla the most valuable company in the world. And Elon said, okay. And here's the stunning thing. I don't know if you saw this, but it was actually submitted to the SEC. That tweet was ended up getting submitted as material information. I shared it with people on the Trader Oasis community today with a trade also, because I saw ahead of time that I knew that it hadn't broken the news yet, but it was obvious that it passed. Let me see if I can pull up um, that story here, the SEC story. And there it is. Yeah, I was a little bit blown away that this is the SEC's website here. This is a 14A form. And here's the tweet down here from Holmar's blog. Okay, Elon, you got the options. Now you make Tesla the most valuable company on the earth. Deal? Yes. The fact that this got submitted to the SEC as material information, I think is really interesting. And we've seen Tesla really hasn't performed so greatly this year. It's of the Magnificent Seven. It's kind of been the laggard, and we'll see if this wasn't enough. What Musk did when that compensation package came out, nobody thought it was real. Nobody thought those benchmarks were realistic. Everybody's like, yeah, sure, we'll pay him that much money. There's no way he's going to make Tesla this valuable, and if he does, he deserves all the pay. And it exactly happened. So he's clearly a guy who's motivated. Like you and I were talking about, if you motivate people and compensate them, they tend, especially motivated people, if you compensate them appropriately, they meet goals. So
So, it's you said that they haven't performed well of the Mag 7, the big 7 tech companies, but we know how quickly that can change too.
yes,
Because before 2 or 3 days ago, this chart actually looks really similar to the chart of Apple. Apple's also another stock that had not performed. Look at that. It went sideways basically for a year.
yeah, for the whole
In
year.
fact, it first broke $190 a share 3.5 years ago. Apple did. And they've basically been dead money for a long time.
Yeah.
And then in 3 days, you say the word artificial intelligence at your Worldwide Developers Conference, and bam, you add $600 billion in market cap or whatever that represents. I do know that Apple is once again, after today's close, officially the largest US listed company in the world. They surpassed Microsoft today.
$3.29 trillion.
Yep. And, Tesla, could Tesla do that? Maybe. Like again, I don't bet against Elon. They've got a long ways to go to catch up with revenues and the growth. I think that Apple has already demonstrated. I think the same thing with Microsoft and the obviously the euphoria surrounding Nvidia and the growth numbers you see there. Could Tesla do a similar type of story? Sure. Again, I think they're cutting edge brilliant over at that company. And do you remember when we were in the Bay Area once, and I don't remember what it was for. This is probably 5 or 6 years ago. And I remember having a conversation with someone who worked in the area who I don't remember if they worked at Tesla or if they used to work at Tesla or they used to work at Meta. Anyway, the comment was, sorry, I'm kind of beating around the bush with what this comment is. All of the smart engineers, all of the really good ones have left Apple and Meta, and they now are at Tesla.
Well, that was 5
you
years
remember
ago.
that?
Yeah, I do. I remember the conversation. I remember, were we on Nob Hill, I think, for a meeting. Yeah, I love being out in Silicon Valley. And I worked for a company doing acquisitions back in the .com area. So like in 99, 2000, 2001, I was spending a lot of time out in San Francisco because I worked for a Fortune 100 company and we were acquiring technology. It was a lot of fun to be out there. And certainly that area vibrates at a different frequency. People have a different energy and different motivation. So it's interesting that, that culture and the technology and the innovation, which we just take all for granted right now, that everything is, everything that we have in our hands, the power that we had. I think if you look back, 10 years or 20 years ago to imagine where we are now, and this is, you and I talked a little bit before, I think Apple's announcements were, to me, a little bit of a letdown. I mean, they were a little bit deflating. There was no aha. I mean, everything is features that we already know. Now, Apple is going to do what Apple does, and that is just integrate it seamlessly and make it just work. And my initial reaction to the press conference on Monday was, okay, so Siri is finally going to do what we think Siri can do, that you can ask Siri a question and it'll be able to figure it out and integrate all this stuff. And it's not huge in what they've done in terms of massive features. But what is big, and I think the reason why we see Apple is this realization, which occurred to me slowly, is I have to buy a new iPhone now. I've got an iPhone 14, which is a decent phone. And the iPhone 15 was what, again, like another 2 megapixels on a camera or something. Like the battery life is basically the same, the feature the same. Do I want a USB-C charger? Why do I want a new phone? Now, the new AI features, which I use AI every day. I'm using ChatGPT or Perplexity all the time to do everything from figuring out how to fix the cracks in my driveway to how to better explain the Greeks to somebody. I use it all the time. It's helped me solve legal problems. It saved me thousands of dollars in lawyers' fees. It's helped me diagnose an issue with my knee that my doctor didn't know about. It's all incredible. And do I pay anything extra for it? Yeah, I pay $20 a month for it, for Chat GPT. I'm not gonna, and I use Grok too, by the way. I use Twitter. Somebody asked me this week, I don't know, I don't know if you use Grok. You probably don't.
I don't actually.
The reason I use Grok is if you wanted to know why a stock moved today, it's the only place that I know. You know that Twitter, let me get to my other platform here. You know that Twitter is the good place to go if you want to find information as to like what's happening today. But you as you'll tell people, hey, you got to be really careful because you have no idea why, who you're following. You got to follow certain people because there's some other people out there that are just spewing garbage. So there's certain people you have to follow and you have to filter and block other people. But if you wanted to ask Grok a new question and say, why did Tesla stock move up today? Now this is part of their premium service, so I think I paid $15 or $10 for it. It is going to tell you why, like a pretty good answer, and it's today. The problem with ChatGPT or Perplexity is they're a year or two old. They're using data that's not recent. This is current. So what caused the news today, and it's a big part of it is the Tesla stock 7% pre-market because of the shareholder package approving his compensation. So,
There you go.
yeah. So that using AI. So back to Apple, I think what the realization here is Apple has a pretty good business, but this is really going to, and the big spikes that happen in Apple are due to it's all the iPhone. And this is enough to cause people to want to upgrade and get a new Apple Watch, and get a new iPhone, get a new iPad. This is the catalyst. And even though it didn't seem big, it's big enough.
So again, I'm just spitballing right here. So is that then, if that's the case, the excitement of that just caused Apple to jump, what is that, about 15% in 3 days? Is that robbing the future growth of Apple then? Because if the AI has not demonstrably changed their profit margins and a new cash flow potential stream that could come in from AI, if that hasn't changed and all I'm doing is I'm stealing upgrades from the future, is this a short opportunity then in the longer term because all I'm doing is stealing from the future?
Yeah,
You know me, I like to find a way to create a short.
The valuations on Apple are all over the map, and you got the big boys like Goldman Sachs and Morgan Stanley have numbers that are like 220, 230. So we're right about there. And then other places are, I think, like Morningstar is around 170 or 165 or something like that. So there's a pretty broad spectrum of where they are. And if you apply traditional valuation metrics to Apple, it's way overpriced. So what people argue for giving a higher multiple, a higher PE number. So Apple's PE historically would run 12, 15% or 12 in the PE ratio, price to earnings ratio. You'd see this number to be in about 12 or 15. And now it's at 33. And when it was in the mid 20s, it was like, wow, that's really overpriced. So this is the price of the stock divided by the earnings. So it is definitely commanding a premium. And I think you're right. They're stealing from the future. I think the hope is that Apple can command a higher profit margin by selling more services in the future. And I don't know.
That's what I think too. I think that's the only way you can say I believe in this long term. I'm just glad I had a Costanza trade on during this, because when it rolled through 195 with the big gap up, I adjusted it by buying some long calls to go with my stock. And I crushed it in the last couple days. It's been nice.
Nice. Yeah, that was timing's right, because that Costanza trade, if you wait too long to buy the stock, you can fix it. But it's a little bit more of a challenge. But that's timing. That's perfect. Man, that worked out really nicely for you. It's why, golly, you want to become a better trader, you got to have rules. You got to have a process that you follow. You have to have primary, secondary exits. The shooting from the hip is great, but if you don't have a plan, then you plan to lose money. Because so anyways, that's really nice. I'm glad to hear it, Greg.
So we've talked a bunch of individual names. I think we'd be remiss if we didn't talk about the CPI.
No. Before we go into stocks,
you don't want to talk about CPI yet? All right.
No. I just wanted to talk about one thing. We started heading down this path because I was reminiscing about the 2000s, and I showed you a chart right before we presented. And this came from our friend, your friend, and my friend Bill Kennedy from RiskBridge Associates. And actually, it's from research from Strategas Partners that they shared. Now, I'm not using their slides. I created the data because it's public data, but they're the ones that told me to go look at it. So hands off to Don Rissmiller and his team at Strategas Partners, and to Bill Kennedy at RiskBridge. Really appreciate you guys sharing your research with us. But here's the chart that was shared, and this is Cisco over about a little over a 10-year period from 1990 to March, the end of March in 2000. And this was one of our big bull markets that we had lasted just over 10 years. And this is a log scale growth of Cisco. And this is something that I asked you, is this reasonable? Like, well, it has to be reasonable because that's exactly what happened. And we did get the dot-com crash that happened after this. And this is a select period of time. But I think if you look at this chart and you say, yeah, that's reasonable. That was a steady growth. It was huge growth. This is normalized to 100%. So whatever the price was, that's 100%. If you bought a share 10 years later, $100 is now $87,439. So that's some tremendous growth that you saw in Cisco in that period. So is this realistic? And the question I ask you, is it realistic? And you say, yeah, it is. So let's put things into perspective. This is Nvidia. Using a different scale, this is starting from the start of the current bull market that we're in, that started January 2020, and going through to, or the bull market, at least for Nvidia, going through to today. This is today's numbers. And the argument, it was just one phrase: what if we're only just getting started? And I think it's an interesting perspective when we talk about companies that were just not more, just much more than a year ago, were $1 trillion companies. Now they're $3 trillion companies. And are we going to see a reemergent or a continued trend? And maybe I'm voting for the Magnificent Seven to get back together again, with Apple and Tesla getting back in there with the rest of them, Microsoft and Apple and Google.
So at this scale, if the same thing happens, then we will see Nvidia peak out at about $125 trillion market cap. If we have a similar move.
Well, if the Fed keeps printing money.
Yeah, there you go.
That liquidity has to go somewhere.
There you go.
Wow.
So,
past results don't lead to future performance.
Yeah, exactly. So I agree. I don't think the bubble's done yet. I think we're still inflating the bubble. I still think we're at the beginning of AI. I'm still going to call it a bubble because other than Nvidia, I have not seen any company demonstrably make more money because of AI yet. And the only reason Nvidia and the other chip players around it, right? Broadcom, Micron, some of the other ones who are also getting big mega cap tech buying chips from them to build these server farms that are allowing AI to function and think at the scale that it does. Again, I'm not saying that it's not a scalable, amazing technology that can help people. Show me how it makes people money and the companies that are actually making from it money, and then you might change my mind on the ability for it to become a long-term thing like the internet did. Now, again, maybe I'm Paul Krugman.
Nvidia is making sick money.
They are making sick money. There's no doubt. The question is
they're making great money.
The question is, at what point is Meta and Microsoft and Google going to say, okay, we've got enough server farms now. We don't need to keep buying chips from Nvidia because we've built it all out. And I don't know where that answer is. Or is there going to be someone else, whether it's Taiwan Semi, whether it's Micron, whether it's Broadcom or Qualcomm, can someone else step in and compete with Nvidia? Or is Nvidia so far ahead of everybody? Because who was it it was Qualcomm, I think, that actually had a disappointing earnings quarter this quarter. There was a lot of hype. Was it Qualcomm? Sorry, I'm a little fuzzy as to who it was. It was not
Dell.
Broadcom. Broadcom had a really good report.
I just know how to trade on Dell, and it did not go well. But
Yeah, Dell.
I'll make money on that trade, but it did not go as planned.
No, I don't mean to be the continual Nvidia bear. I like I say, I think the stock can continue to inflate. I just don't believe it's sustainable long term. Because I think eventually companies who are spending that sick amount of money on servers are going to say, okay, we bought enough. We finished our server farm. We're done buying chips from Nvidia. At what point that happens, I don't know. We'll see.
Yeah, they are having serious issues. They're actually limiting shipping to people who, because people are ordering them and not able to use them, so they're allocating them to only people who can use them. But yeah, let's
Good problems.
what's that?
Those are good problems for
Yeah,
them.
good problems. Like if you're not going to use our chips, we're not going to send them to you because people can't build the server farms fast enough, the racks to put them, and so I don't know. There's still growth there. I saw a meme that was kind of funny. It was showing, during the gold rush, the common wisdom today about how you made money in the gold rush. How did you make money in the gold rush in the 1800s?
You sold them shovels and
You sold
picks.
them shovels, right?
You
Well,
didn't. You didn't make money
that's
anywhere
what
for gold.
everybody's doing right now is selling shovels.
Yeah.
So somebody has to use the shovels. There's I think there's 2,000 private AI companies that are all trying to do something with large language models. There are not going to be 2,000 companies going forward. Some of those will be acquired. Some of those are going to go out of business. But I don't know where you put the money. But anyways, let's pivot. I think there's still more room to grow. I think that perspective. I was contemplating that chart of looking at Cisco over that 10-year period and thinking like, wow, that's pretty reasonable. It's what happened. And then looking at where we are in perspective of Nvidia, and you think of Nvidia being crazy high. The problem is people don't understand logarithms, and that chart that I was showing was on a log scale. People don't understand. Like I said, logarithms or power, anything that's not linear. Our brains only really process linear. I'll show you what I mean. I'll put this chart back up here and then switch the scale uh, and make it linear. So there's linear.
Yeah.
And you say, well, that's a freaking bubble. That's crazy, right? But logarithmically, and stocks do move logarithmically. This is, I mean, for millennia, we have prices on equities, literally thousands of years, prices of equities. They've always followed this logarithm, and human brains tend not to realize that. But anyways, so let's pivot from individual stocks to CPI. So what did you think of the CPI?
Wait. You got. I got it before you go there.
Okay.
There's a quote pulled from Musk's conference just now that just got tweeted. Musk is saying that everyone will want one humanoid in the future. So he's talking about robots.
No, yeah, that's not a surprise.
Yeah.
Yeah, so
we're gonna have humanoids.
Optimus. Okay, maybe we talk about Optimus. I gotta be honest with you. I have no idea why I'd want an Optimus other than, mop the floors, fold the laundry, put the dishes away. What are you gonna do? Mow my lawn? What are you gonna do for me? Now, I do see use cases. I used to work in the nuclear industry, and there are places people need to go that you don't want to send a human. I mean, obviously, you can say, "Hey, can you go in there and turn that wrench?" Robots, perfect application. Even doing surveys or taking pictures, huge value in dangerous places like offshore drilling rigs where people die, or maybe logging, or I don't know, maybe even fishing. I don't know.
Or Rosie the robot.
Rosie
from the
making dinner.
Jetsons.
Rosie is not going to make me dinner. There's not that much work for me. Now, I think of my dad. I would love one, my father having one, because, if he needs help, if he fell down or he left the stove on or something, doing that sort of stuff. I don't understand the use case of a humanoid robot. Do you? Would you want one?
No. It would frighten me. I'll be honest.
It's not. I'm not aware. I'm not afraid of it hurting me or anything like that.
I am.
See, here's the thing: is I used to work in a corporate job, and we used to have. This is what I thought of: summer hires. So we would get these bright college kids, which were usually related to either executives at our company or our customers. And we hire these really smart kids to come. And me, I would have like this project. It's like, okay, I want to take all this data and I want them to put it in a database and I want to correlate it to whatever. So take all the, and some project. So the kid comes in, said, what do you need to do? I say, here's your computer, here's the project, it's 2 weeks later, kid comes back and says, okay, what do you want me to do next? Like, what do you mean? What do you want you to do next? I'm done. Like, done? You mean you're done? I did everything. In 2 weeks, you did all that? I expected that to take you the whole summer. And like, what do we do now? Straighten out the files. Go reorganize that. Go through all the files and pull everything that's over 7 years old, throw it away. The work that they do. I mean, what do you need a robot for? I don't know. I don't I'm having a
If I
hard
could have a
time.
robot that could tell the difference between my little cucumber plant that's like this big and the weeds that are all surrounding it,
There you go.
and
Weeding.
save
See,
and
and I'm sure
save
it
my.
could. Well, have you seen that app that you can take pictures of plants and it'll
Oh yeah, I've got it. It's actually amazing.
it
Love
is.
it.
Yeah. My wife is like, what weed is that? Or what plant is that? I'm like, it's a weed, pull it. No, it could be a flower. If anybody has an idea of how they would use a robot, I would love to hear what that use case is. I'm
Weeding the garden. That's me. I just found
eating the
one.
garden. I seriously, if it could do the dishes and clean the floor
And
and
I
fold my
wouldn't feel
laundry,
bad parking it in the shed. I
yeah,
just keep it in the shed when I.
you go sleep in the shed. Yeah. Uh, I mean, what do you want? So, but seriously, you need to get off your ass every now and then and do stuff. Like we're all just going to turn into big jelly rolls,
Like
Like
the
just
like from that other movie. I love cartoons. Cartoons are my favorite.
what other movie's that?
The one where they send the spaceship out and they had Wally, the robots.
Oh, okay.
Remember? And the humanoids are still just like rolling around in their little chairs and eating their liquid drinks. And
Yeah.
yeah. All right. How are we gonna talk about CPI now? What's our segue?
Uh, Segue, CPI. There we go.
There you go. CPI data came in showing some progress. I mean, the market obviously saw the report. They were happy about it. We rallied on the news. We had a Fed meeting this week that, to be honest, didn't change much, but the market thought they did for some reason. But the CPI data did show we've got 2 months in a row now of a softer than expected report, and we are showing some progress. And I always love to look at your data points here to say, okay, is the progress real or is it in something that doesn't really matter that much for consumers? So
Yeah. So
what
the
are your
orange
thoughts on
lines are
CPI?
the changes in month over month rates. So a negative means that it went down. The price actually went down on that item. The blue line is the importance. And I've got the blue line truncated because rent of shelter would be off this chart. It's out like 30. Rent of shelter is by far the most important thing. When we can zoom in here and show you what the lists are. So rent of shelter, transportation services, medical services, education and communication services. That's your cell phone and your cable bill, gasoline, new vehicles, recreational services, limited service meals and snacks, used cars, trucks, meats and poultry. So, etc. I like the sort of squint test. If you just look at this and say, which way are important things going up or down? And certainly this is the one that gets everybody's attention is gasoline being down 3.6% month over month. And it's a very important factor because it goes into everything else. I mean, it goes into the price of eggs because anything that gets transported, which is pretty much everything other than a service, gasoline or fuel prices touch it. So we're seeing that'll trickle down. I think that'll actually trickle down in the future, and probably we'll see some next month being lower on some of the other items. But this is the first time that I look at it and say, yeah, the headline number is down lower than expected. But if I do the squint test here, I say, yeah, it does look like we're making some progress on some important stuff. Now, certainly big moves on stuff that's not so important. And then if we look at the other, this is the month over month change. So what went up? Now, the things that moved up the most are not the most important things. Now, there are some very important things that did go up, but equally some important things that went down. So looking at the graph here, I'm encouraged that we're making progress on inflation.
I agree. I agree with you, by the way. I'm gonna still kind of steal Fed Chair Powell's line too, and just say that I want to see more than one or two data points. You know, we had 3 months in a row of worse than expected data points to start. You know, I want to say that was starting like February, March, April. Now we've had two positive reports with the CPI in May and June. Maybe give me one more positive report in July, and now I might start thinking about changing policy. And that's basically I think what Jay Powell said at their conference is that they're still data dependent. Their wording didn't change much, and kind of set the expectation that we're still maybe seeing one interest rate cut in this calendar year, and it wouldn't come, in my opinion, until December if we get one. I don't think you're going to see one a couple of days before the election, or is it a couple of days after the election? I forget when the Fed meeting is. I know it's right around the election date, so I don't think they'll move in November.
Yeah, you get September, and then November is right after I think the election. So
I think that's what it is. So
I'm still in the camp. I don't think we're going to raise rates this year.
I don't either.
If we see inflation crushing down, but we're looking at the chart. The core number is still heading down, but you can argue that the headline number, and it depends on the scale. When you look at this graph, you say, oh, it's flattening out. In this graph, it looks like it's still going down. But I showed this time scale going back to 50s. Uh, and the reason is because this is what the Fed is afraid of. And we've seen this happen. If you go back to 1900, and we have CPI data going back that far, there are two other CPI spikes that are double humped camels. And that is the fear, and is that they start cutting rates and inflation turns around and starts going back up. And listen, the Fed can only do so much, and we have the Fed tapping the brakes, not slamming on the brakes, because if they're slamming on the brakes, the rates would be much higher. They're tapping the brakes, but Congress, through fiscal policy, is punching the gas, and that is giving free money. And this, no political opinions here, but there's still fantastic liquidity, and we've got Congress doing its thing to try and get reelected by giving people money in various forms. So I think if we had Congress and the Fed aligned, let's back off on fiscal and monetary progress. We would get inflation under control. But I don't have any hope that that's going to happen.
Did you see the letter sent by Elizabeth Warren and who was it? I don't remember, the other chairman of the Democratic Finance Committee in the House. It was basically it was a letter to Jay Powell, and it was very professionally written, like it would be, but it was basically saying you need to cut rates because it's causing X problem here, and this is happening here. And
I thought that came from the White House.
Maybe it was signed by Elizabeth Warren. Now, maybe she did it on.
No, there's one.
Maybe the White House sent one too. I didn't see the White House one.
Yeah, there's a White House one too, saying the same thing, that Jerome Powell needs, which people were sort of howling about. The president is the Fed is supposed to be independent. It's supposed to be able to not be influenced by Congress, and people howl about United States presidents trying what Trump tried to do, what Nixon did, what almost every president, Eisenhower did it. Truman did it. They've all tried to influence the Fed and tell the Fed what to do. And I don't know. I think it's just so that he can say, I tried. But the other inflation data was PPI, which came in again lower than expected here. So we're still looking at the scale here, though. We're not seeing continued significant progress. Lower than expected is, not terribly low. We're not getting down the producer price indexes looks at the business side of things rather than consumers. But inflation, the goal is actually PCE, and that's I think a week or two away before we get to looking at PCE, and that's the big probably well, it's what the Fed uses for determining rate policy. It's its preferred measure, but of course they look at all of these numbers, and I mean everything as far as the Michigan Consumer Sentiment Index and housing numbers. They look at all the stuff, but the goal is to
So
get 2%.
so yeah, I guess I could still come back to I don't see the need for the Fed to cut rates. I mean, the employment numbers are, like you said, are still strong. The companies are making money. Is it equal across the board? No, but it never has been. I mean, you've got companies that have strength right now because of their size of their businesses, and you could make an argument that's being made by some people with the FTC that some companies are getting so massive in their market caps that they're becoming a danger to a free economy because they control so much of it. That's a whole separate issue that doesn't have to do with the economic growth or not. I think as long as our job market stays strong, as long as we are showing companies in the S&P 500 they're earning money, why do we need to cut rates? I don't see the case.
Well, the argument is for debt. Our debt
Yeah,
is, but actually, it depends on the data that you look at, and the right way to look at that is to normalize it against GDP, and the ability to service debt is
right.
it is elevated, but it is not as bad as it's been in the past. So it is outrageous numbers, and I love Thomas Massey where he walks around with the debt clock that gets updated, and it's kind of stressful to see. And I'm fully on board with us trying to fix that debt problem. And that is a pretty good argument, but I don't think it's not as bad as it could be, and it's expected not to get really bad for a couple of years. So I mean, I still don't know that our Congress will do the right thing, but yeah, that's there is an argument. I'm just saying that because I know that some of our listeners like, the debt is a problem. We totally agree. We totally agree. But it's not enough of a problem that it's going to cause them to do anything about it.
Yeah. Yep, I agree. I found that letter. It was from at least the one I found, it is from the US Senate. So it was signed by Elizabeth Warren, Jackie Rosen, and John Hickenlooper.
Oh yeah.
And yeah, it was dated June 10th, and it's basically saying, hey, we're writing you to urge the Federal Reserve to cut the Fed funds rate from its current 2-decade high of 5.5%, and that the ECB has already done their cuts, and we need to follow suit. It's time for the Fed to do the same. Yeah, you're right. They try to stay politically neutral. They do. The Fed. I mean, you and I have had conversations with Fed governors, and they try to stay politically neutral. But when you are in the political climate that we are in now, I think it's really hard for them to truly stay politically neutral on their decisions. And I think this is the Senate trying to put some screws to them to try to cut rates. Probably knowing that that's going to spurn a little bit of excitement in the market before the end of the year. And you have to question, is this being driven by let's make everyone happy right before the election so that we can re-elect the incumbent party?
Yeah, I swear I saw that letter on Twitter, but I'm not able to find it now. So maybe you're right. It must have been Elizabeth Warren because I see
There
there was
may have been another one too. I can't find the Joe Biden one either, but
um yeah, I just thought I saw the White House. Oh, you know what? It definitely was. Yeah, that was the letter. Yeah, I'm sorry. I just saw the logo. I saw the United States on top of it and thought it was the White House. But well, that's good that Joe Joe was busy. Do you see him dancing this week? Do you see the videos of?
I did. I did.
Let's not. Well,
We
okay,
can
maybe I'm catching you off guard here, but I mean, people are talking about us. I mean, everybody's saying the word switcheroo. Do you think that's even possible? I don't even know. At the last minute, they went, Gavin Newsom.
There is a clause. I want to say, I don't know the exact article. I don't know I want to say it's like Article 26 of the Constitution or something like that, that has to do with a president who is incapacitated. Um, is there a chance that our current president has the experiencing dementia at his age and becomes unable to fulfill his office? That's the big argument. And I don't know. I you and I think have very similar political beliefs on many things, and I wish that both parties could come up with a much younger candidate. Um, I wish Tulsi Gabbard would run with Robert Kennedy, and I know who I'd be voting for.
This is not like this is not a like some Twitter rumor or
No,
some rag. This is the Wall Street Journal behind
he's
closed
old,
doors,
and
behind closed doors, behind closed doors, showing signs of slipping. Like, wait, like we don't. What we're seeing isn't behind. You're telling me it's worse behind closed doors? I really wish we could. This is not a reflection of oh, this is a reflection of both parties. How come we can't have good things? Why can't we have nice things, Greg? Why can't we have good choices?
so
Tulsi Gabbard? I love it.
I'd vote for. I love Tulsi Gabbard. I
Me
think she's
too.
great. We'll see. We'll see what the election brings. Hopefully, it'll be more than just entertainment.
Well, let's turn it back to markets a little bit. If we do see something crazy happen like a switcheroo, it's going to be phenomenally bad for the markets, in my opinion.
Yeah,
If we think that's going to happen, because our contention here and our belief, and this is from you and I have been together for decades, and we've talked about this for a long time. I'm of the belief that the market cares more about change than anything else. And it's not so much a Republican or a Democrat thing, because the data supports the markets can do well under either.
and just to clarify, by meaning you care, the markets care about it, meaning they don't like it.
Exactly.
Not that they like change. They don't. They do not want change.
Right. And it's not. Is it a Democrat who's going to be bad for business, or a Republican who's going to be bad for business or good for business? Either one is bad. Either one is. Whenever there's a transition, that's usually, and it's not always on the elections. You got to be careful how you look at the data, because the market usually knows well before the election what's going to happen. And I believe that right now the market is saying we know both quantities. So whoever gets elected, it's okay. And bigger concern is the Congress. So what happens with Congress? And do we get a deadlock Congress? So yeah, so we got to keep an eye on the election, because it definitely could. Right now, I think it's smooth sailing all the way through to the end of the year, unless there's a switcheroo or some big changes. So that's probably more than people thought we were going to talk about today.
Yeah,
It's
no
more
kidding.
than you and I thought we were going to.
I'm going to end it with another quote that just got tweeted about Elon Musk.
Okay.
Tesla may be worth more than $30 trillion, driven by AI and robotics.
Buy your calls now. No, don't buy calls. Don't buy calls.
30 trillion. That's a big move.
Actually, I use put spreads to pay for my calls, and that was what I did today. So we'll see how that plays out.
There you go. Okay. Good to talk to you, friend.
All right. Wait a minute. Are we on the Options Animal Weekly tomorrow?
I am. Are you?
I am.
Okay. We are. We'll talk again tomorrow.
All right. See you tomorrow, buddy.
Okay.
Thanks, everybody. Bye.